I do want to welcome in our next guest, though. Take a broader look at the markets and the action that we've seen this week. Joining us now, Patrick Mueller, the RFC and president at Bella Advisors. Patrick, great to have you back on the show. I'd love to kick things off just with your thoughts on the earnings that we've gotten this week. Some huge names, not just the Mag 5, but some big names, some big reactions, and yet we're still having an across-the-board positive Friday.
Absolutely. And it's nice to see that these earnings coming out, right? That the GDP is doing good. We're getting good earnings coming out, helping prop up the markets longer term. And it's so interesting seeing the disparity. And it's nice to see some of these other names coming into play because you have the Magnificent Seven that's really been driving the force of the markets back up so far this year. And we've got, still 45 to 55% of companies in the S&P 500 that are still at a loss for the year. So it's an interesting market right now.
It is an interesting market, and I'm glad that you brought that up, that we've got, just under or close to half of the names in the S&P 500 trading lower on the year. For your perspective, what does that indicate to you? Is this rally real, or is the heavy lifting just being done by a few names, which makes it much more precarious?
That's exactly right. It's being done by a few names. 30% of the index growth is from the Magnificent Seven. And so when you take that from all the losers, there's just not a whole lot going on outside of that. So and that just tells you how much money is just being pumped into AI right now and how much money is flowing that way, that people don't care about the wars, people don't care about inflation and things that are going on. They care about, wanting to see this momentum going forward in AI. So you can see how strong that belief is, and you can see that so far in semiconductors this year.
And you call this rotation from hype to hard earnings, and I sort of love that. What's the clearest evidence you have that that shift is actually happening right now, and it's not just a narrative?
Yeah, we're starting to see that shift because you're seeing a lot of money flowing into other asset classes right now. So you're starting to see money flowing back into gold and silver and precious metals, mining companies. You're starting to see it go into more infrastructure as far as, and especially as far as AI goes. That's going to be a big move moving forward as far as energy. So you're starting to see the money flowing a lot out of tech and moving into different sectors like that to get people some diversification, because you can't have everything tied to what's going on. We can't ignore it. We got to ride this train as long as we can, Marley, on the AI train. But there's going to be a certain point in time with all the money that's flowing in, just like we're seeing good earnings now. It's only going to take one big company not to meet their earnings in the future for us to start seeing a pullback.
Well, and the other thing that everybody's riding right now, of course, is the ongoing situation in the Middle East and in keeping a close eye on these oil prices and what that potentially means. We've got the oil prices rising. We've got inflation concerns here. Do you think that the market is currently underpricing those inflation risks? Because we did just hear from the Fed, and they said that they short-term do see a pop, but beyond that, hard to say. Very nondescript language about whether or not this is going to be a one-off pop. What are you expecting in terms of the cascade effects once we actually have a resolution here, and when that could be even?
Yeah, how often is the Fed right about anything? They're always behind on everything. And hopefully as we see Powell moving out and Warsh moving in, we'll start seeing some better forecasting moving forward from the Fed. But I don't really take anything from that standpoint. And you can just see it at the gas pumps. So, you go to the gas pumps and you see it's hurting people's wallets immediately. I know here in Atlanta, it's gone up about $1.50 a gallon here in Atlanta since this whole thing started, and that affects everything. You go to the grocery store. I had to get stuff for tacos for Taco Tuesday, and it was like $70 for tacos. Granted, I got a family of 6, but the prices of everything are going up, and it's much more significant than I think is being led on right now. So I don't think it's going to be a lagging indicator of what's happening moving forward, but I think we're definitely going to start seeing a shift in that summertime, especially as people start traveling more for summer.
And I just want to flag for you, Patrick, that Taco Tuesday coincides with Cinco de Mayo next week. So you better be prepared for that bill to be a little bit higher, because that is the day we've all been training for. But let's talk about, you said that the Fed is always behind and you generally don't trust them because they're lagging. With this transition here, with the new Fed head, Warsh, likely to be confirmed before that May 15th deadline, does that change your viewpoint on the Fed, or will the Fed always be behind no matter who's at the head?
Hopefully not, but we'll see here very soon. You're going to have a Fed chairman coming in that's going to be much more bullish. He's from Wall Street, and he's going to want to make proactive moves. So I think you can see that moving forward. So because when it comes to Powell, he was just really behind on everything and just really boring. And so I think you're going to see a move, but I don't think there's a big move that can be made until this escalation in Iran and everything that's happening there, all the oil being blocked, and until that comes to fruition and there's an agreement on that, then I don't know that the Fed can make a move until after we get a clearer direction on that.
So while we're sort of directionless because we have too much uncertainty in the markets, where are you looking for opportunity? Where are you going that isn't tied to any of this risk?
That's a great question because we work mainly with folks who are retired, so I always take a more conservative standpoint. So we like structured notes a lot, and there's a great ETF that came out called AYCN that's great, that has a 12% yield on it. And so that's something that, while the markets are getting their act together, or who knows what's going to kind of happen politically with wars, what's going to be happening with earnings in the markets, this is a great place to have some money on, sitting aside where we don't really have to worry about that so much. So I like a lot of those fixed positions like that. And then another, having more of an outlook into the future, all the reshoring that's happening right now. So over the length of this administration, they've been pushing hard the pro-America moves. So I like funds like AIR for that as well, that is taking advantage of those companies that are going to be having that big boom over the next few years.
Yeah, and we just got Apple saying that they're going to start making their Macs in the U.S. Now that came out on the earnings announcement there. But also want to ask about metals and silver specifically, because I hear a lot of conversation about silver, particularly tied to the industrial story and some of that reshoring effort. What's your outlook on metals right now with the backdrop we have?
I like it. With all the, we've had a pullback on precious metals here in the last, since the beginning of the year, but I like it long term, especially with all the uncertainty. You have a lot of uncertainty, you have a lot of fear, drama. You're going to have money moving into precious metals. So I like that. I think silver is going to be a very strong demand in the future because of everything that it's needed for with all of the electric cars and solar and all those different things. There's just such a huge demand for silver. And then my wife is really big on gold. She says we need to buy more gold, but the stuff that she can actually wear. And the problem with that is that if we ever needed it, Marley, she'd never sell it. She'd be like, it's okay, we don't need to eat. I look great.
I mean, I can't disagree with her. So I'm just going to sit here and nod because I also like gold and I wouldn't want to sell it either, Patrick. But thank you for being with us on this Friday morning. I hope you have a great weekend with your family. And thanks for the insight there. Patrick Mueller, RFC and president at Bella Advisors.